Good morning, everyone, and welcome to a quick midweek update from Go No Go Charts. We're going to talk today about the dollar, and we're going to use an ETF, the UUP, that tracks the performance of the dollar. We've been talking about this for weeks and weeks now, the short-term strength in the dollar and how that could affect equities and other assets. So we're going to take a quick look at a daily chart, and then we're going to zoom out as well to look at a weekly chart so that we can put it all into perspective. So let's look at the first chart here. This chart is a daily chart of UUP. And what we can see is that, as we've noted over the last few weeks, the trend in the short term has turned up. We are seeing a go trend in the dollar and represented by UUP. As you can see, we've got higher highs and we've got higher lows. And right now, the go trend is in place with the blue and aqua bars. If we look to the go no go oscillator in the lower panel, what we can see is that after rallying into positive and even overbought territory on heavy volume, which is why that oscillator is darker blue, we've now come back to the zero line, which we know should hold as support if the trend is strong. Remember, if a trend is in place, if a go trend is in place, we should see heavy buying, even excessive buying as a trend moves higher. But any correction or pullback in a strong trend should not push any of the inputs to the oscillator, the momentum inputs, into oversold territory. So it should hold that zero line. And I've highlighted on the chart here, there's a white arrow pointing that out. So we want to see if the go no go oscillator can hold at zero here on the daily chart. And if it does, and if it rallies back into positive territory, we'd expect a new move up in price above. But if we zoom out now to the second chart, this shows a weekly chart, a larger time frame chart of the same security. So still the UUP, still the Invesco Dollar Index Fund. Now you can see that we've been in an overwhelming no-go trend in the dollar for several months back into summer of last year. And we can see that because of the pink and purple no-go colors painted on the price bars. Now, what I've added here on the bottom chart is the go no go squeeze indicator, which shows when the oscillator has been riding the zero line. And as it rides the zero line, that grid of the squeeze, the white grid that you see in the bottom panel, will build and climb to an extreme. And often when you break out of a squeeze, when you break out of a period of reduced volatility, the next move can be quite significant. And we see that several times here. As the oscillator finally breaks below the zero line, there's been a significant move down. It's happened twice already on this chart. But what we see towards the right is slightly different. We've broken above a downward sloping trend line, and the oscillator looks as though it's breaking out of the squeeze to the upside. So perhaps for the first time on a larger time frame chart, we're also seeing the first signs of some bullish activity. Remember, it's still a no-go, still painted pink and in those purple and pink colors, but perhaps the slight first sign of some bullish activity. So I hope you enjoyed this quick video, and I look forward to speaking to you all again next week.